This video is brought to you by Canark Resource Corp, trading on the TSX under CCM and the OTC under CRCUF. Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with legendary investor and silver expert, the silver expert, David Morgan. David, thank you so much for being with us today.
Daniel, it's great to be with you.
David, I want to talk to you. Let's just kick it off with silver. You know, I was before the interview, we were talking just about silver. When I started buying in 05, 06, I was learning about this, and of course, I learned about the dollar and the fiat currency crisis. This was all new stuff to me back then, and it made sense. So I bought silver, and then I made a lot of money with buying silver. And people who are learning the same thing over the last 2 years, it makes even more sense with all this QE and stuff. Only silver's been a disappointment for them. What are your thoughts on the current activity in the silver price? And I know it's kind of hard to ask someone like you who's already seen a 10-bagger pretty much from where you bought, but from people who just bought in the last 2 years, they're kind of sitting there scratching their head going, wait a minute, I bought silver to profit from QE, and I'm not seeing silver really rise.
Well stated, and it's a fact, so obviously I'm not going to argue about it, what we know. What I can say is that you're correct that the fundamentals are probably stronger now than they've ever been. But again, the price has to move. So we got to drill down on that topic. One is it's a phrase that I coined on another financial network. And I said these markets have a tendency to scare you out or wear you out. We're definitely in the wear you out phase right now. And it's very tough. I mean, for people that bought silver at, 30, 35, 38, 40, 42, and there's some out there. They've held on for about almost 2 years, and the fundamentals look good or better, and yet the price hasn't reflected that. So all I can say is you've got to, on an individual case-by-case basis, I can't speak for you, but I would say if you're in that position, look at the reason you bought it, if the reason you bought it has changed or not. If the reason you bought it have not changed, I would suggest that you hold, or perhaps add down. I don't like dollar cost averaging in stocks and commodities, but on physical metal, I think it can make sense depending on what your position is. So really, it's that simple. I mean, looking at the current price action, it doesn't make much sense that after QE4 was announced, that was the recent high. And when I say recent, I'm talking the last weeks, and it's fallen off of there. It kind of begs the question. Is there someone that's in the market that's selling these markets off on the paper side or not? What's really going on here? It doesn't make any fundamental sense. And the last comment I'll make is that bull markets are historically known to shake off as many participants on the way up as possible. So I'm sure there's a lot of people, I don't know what percentage, and funds and money managers and who knows whom else, that bought over the last year and a half or so that have been disillusioned with the silver market and have sold their position or lightened up on their position. And so there's a lot of work to be done to the upside that we have got to get rid of what's called stale longs, people that are waiting to break even at 32 or 35 or 38 or whatever the price is, that will sell back in the market because they haven't lost any money. They've broken even, psychologically feel better, and that will depress the market for a while. Once that is taken care of, then we'll start getting into the 40s and high 40s again, and then enthusiasm will come back. And ironically, Daniel, what will happen is some of those people that sold break even or sold at a loss said they wouldn't buy silver again. Once it goes past 48, they'll get excited, they'll repurchase, where they really would have been better off just holding. And I don't think the whole period is much longer. I could be wrong. It's a tough year to call. I don't think it's going to be the best year for silver, but I think silver and gold will probably do better than a lot of other asset classes year over year in 2013.
David, after you accumulate silver and you get some silver mining positions, hopefully from silver-investor.com, where you offer some great picks, what other commodities are you personally buying or at least interested in where you're watching them with a regular basis, thinking about entering a possible position in some of the companies that produce those commodities?
Well, I think generally speaking, it's probably better for most people I'm not real fond of ETFs. but they serve a purpose. I think really a commodity index is probably a good way to go, but the specific ones would be energy, food, and water. I mean, those are the three most critical. As important as the financial system is, because that's how we conduct business and interact with each other when we want to eat or house ourselves or whatever, it's important. But nothing's really more important than the energy sector. So that's one I think you should look at. The other one, of course, is food. I mean, we all eat. Everybody on the planet, from the richest to the poorest, eats. And water. Water is really critical. The water crisis is upon us in some areas, and it's going to become more apparent as the years go by. So those are three that I would look at. I don't have any specifics here. We do have, there's some guys that work with me that have started a new website. They're getting more into the oil sector, or the energy sector, I should say. So we can talk about that later, maybe.
Well, let's talk about that right now. So what's this new site called? It's Riches and Resources, correct?
Yeah, that's right. Riches and Resources, all one word. It's a few guys that have worked with me in the past and a couple guys that I know that haven't ever contributed to the Morgan Report. But it's based upon individual reports. So if there's a company XYZ that you want and it's on there, you don't have to worry about what my opinion is, or a guest editorial or some contributor or whatever. You basically just go to the site, you get basically the facts, man, just basically the outline of a given company. So it's a good way to go if you've already invested in a certain company, you want to back up your opinion, or you're thinking about investing in a certain company, you can, download the report after you pay, of course, and, help you through research. And, of course, in my opinion, they're very fair value to undervalued as far as what these reports cost.
That's great. That's great for the average investor who's looking for more in-depth analysis on something they might be interested in. David, last year when we saw natural gas prices get really low, where the producers were saying, hey, we can't produce this stuff, we're breaking even. Obviously, we saw natural gas have a big rally, and we saw that with silver, last decade. Right now, the uranium producers are saying the same thing, and in fact, a few of them are even reducing production or just shutting down mines. What are your thoughts on the current uranium market?
Well, I'm going to back up and say I won't give you an opinion on uranium, but I want to back up to the natural gas. The way I'll frame the question, and you can correct me if it's not, but you got certain commodities that are basically at or under the cost of production. And would that be a fair assessment of what you asked me?
Yeah.
Okay, so having that as a premise, what I would say is there's a book, and I've studied, the markets and continue to do so. As I've said many times, I'm not a know-it-all. I'm a learn-it-all. And there was a book written by, I think his name was Weiss, called You Cannot Lose Trading Commodities. Well, by the time I bought that book, I had lost some money trading commodities. So I was very interested in how you cannot lose trading commodities. And the whole premise of that book is if you can buy a commodity under the cost of production and hold it long enough, you will make money. And that just really reeked of very simplistic yet truthful words to me. And I know that the cost of production of silver at the time that I was, pounding the table trying to get people interested in that market was at an inflation-adjusted low of all time. In other words, the low fours on an inflation-adjusted basis was lower than 25 cents during the Great Depression. It had never been at a more of a low price in the history of recorded history. And no one was buying that low. I mean, Warren Buffett bought in that area. I was buying in that area. Bill Gates got a position in a very low time, a low. George Soros with the Apex Mining at the time, which is more of a zinc mine than a silver mine, although that wasn't how it was advertised, got in near the low. So the point being is that with uranium, with natural gas, with any commodity, especially one that you can buy, hold, and store, which isn't true really of uranium or natural gas, but or their producers, if you can buy it under the cost for production and have some patience, you are going to make money. It's really that simple. So that's my thought on it. I mean, uranium has been beat up for so many reasons, and part of it, unfortunately, is this event with Fukushima. But nonetheless, it is a commodity. It is undervalued, and if you've got patience, I think it's definitely something to look at.
Well, that kind of leads us into my next question, and that's about being a successful investor. Because a lot of people do. I talk to people, so many, and I'm sure you talk to the same people that where they have a portfolio of nothing but juniors, and of course they're just bleeding themselves to death, or people who buy an investment that they just love it and they sell it in 2 months because the share price is down. When you buy an investment, David, and not a trade, but you did your due diligence and you're going to invest in something, whether it's a commodity or a company. What's your frame of mind when you go into the buy? Are you going to be with this investment till the end of the cycle, until the end of a certain objective with the company, or are you looking at years? What's your mindset?
Yeah, well, it's going to be a rather complex answer, but I'll try to keep it simple. First of all, I do both invest and trade. And, like anything that you're really, skilled at in life, for example, playing a musical instrument, you might be able to play, all kinds of different music, but you might be able to play country western, rock and roll, classical, or anything else. In other words, you got a big skill set because you've been working with them for so very long. So my particular skill set is pretty good because I've been in the market since I was 16 years old. Nonetheless, I'll answer your specific question. On an investment, I break them down into three categories: top tier, mid-tier, and speculation. Speculations are money you can afford to lose. So there we basically look at it not as a buy and hold, but, is the company performing or not? If it's lose, 15, 20%, 25%, whatever criteria it is, you could probably sell it and recycle that money into another speculation. There's another way to look at it. If it's really, truly money you can afford to lose, you could just hold it and move on because you put such a little amount into it, it's not affecting your sleep at night. That's the way I speculate. Now, sometimes the speculation will turn into a growth stock, and it's a whole different story because the drill results or whatever, but we're way out of the cycle where it pays to be in that part. I mean, the part of the cycle where you made money in exploration or very small micro-cap stocks, that was between 2000 and maybe 2005 or 6. Those days, for the most part, are over. Yeah, there might be another discovery or two for the cycle end, but that's not the place to put your money right now. The buy and hold, I basically at the top tier of what we suggest for opportunities in our reports are ones that you could buy and hold through the whole cycle. Mm-hmm. Having said that, you could do a lot better if you just pay a little bit of attention. So what I do is I look at everything that's made the top tier that I feel comfortable enough that if you bought more than one, no one's good enough to buy one. But if you buy the 5, 6, or 7 that have made it to the top tier, you could buy those and hold through the cycle and possibly make money. But we suggest you hold at least 3 or 4, maybe 5 of those. But what we also do is we evaluate them on a month-to-month basis and see out of those 7 or so that have made the top tier, which ones are performing the best. And we report that every single month in the morning report. And I had a couple fund managers that have made substantial sums just by basically moving in and out. And it's not much to move because one of our stocks just keeps making new highs. It's backed off now. It's a buy and hold, but it keeps every month coming up to the top. And that's kind of how these bigger, macro cap stocks are. And so, when one dropped off the list and another one was stronger, he moved that money from the one to the one that was stronger and just used that technique, which is extremely simple, and did a lot better than had he just held the ones that made the top tier. So let me be very specific here, Dan. This is part of the work that we do. I'll give you a quick example. Silver Standard is one that we had at 65 cents Canadian, certainly in the category of speculation. But yet that stock made it to, I think, around 40. You have to look at a chart. But it started to act very weak technically, and for my advanced service, I showed the technicals on it and said, if it breaks this uptrend line here, I'm getting out. And I did. And I never looked back because the company really is a different company. I mean, it was right before Robert Quartermain announced his leaving of Silver Standard. I had no inside information.
Yeah.
But it was ironic that somebody probably did because stock is acting very weak. Have not come back to that stock, but yet that's one that I said from the start, if you buy and hold this all the way through the cycle, you're probably going to make money. But I say this is a great one now. No, buy the morning report. See which ones are at the top tier. That one will be listed, but it certainly wouldn't be the ones that are highlighted as ones you should be owning right now. So even in the buy and hold category, we really emphasize which ones you should be in at this moment in time, meaning month after month after month. What can you buy and hold with impunity? I think you can if you diversify, if you hold 5 of them. To think anyone is good enough to buy one stock and get it right every time is, you have to be a moron. No one can do that.
Yeah.
But yet people try that all the time. I have youngsters sometimes that'll get the report and look at one company that's way down or something and buy it, and it doesn't perform, and they're mad at me. Well, they haven't followed any of the outline of how to use the morning report. It's the first thing you should read when you subscribe.
Yeah.
If you want to learn how to play tennis from someone that really knows how to teach it, you ought to do what they teach you.
Yeah.
But if you go to the tennis lesson and you got all these preconceived ideas, and all you want to know is that if you don't put your little pinky on the ball, that's the way they serve it right. And that's the only thing you focus on, and that's nothing else. You look at 0.001% of what they teach, you're not going to get any value out of that.
Yeah. David, since we're on the topic of stocks, I know it's kind of interesting, for some of the more hardcore silver people, it's more of a controversial issue. For most, it's not. But there was a report in Bloomberg today that said 1 out of 4 Americans are now pulling money from their 401ks in order to pay their bills, not for retirement, but just to pay debt payments on previous loans they've made. I wanted to ask you on the overall stock market, can stocks still be a good investment without the huge retail buyers of, the baby boomers were buying in the 80s and 90s, this huge generation, and now they're either exiting for retirement or they're exiting because they're to survive. So that volume of the last 30 years, at least from Americans, isn't probably going to be there. Do stocks need volume to rise? Does the market need volume to rise? And I guess to add on to that, at this point for the next decade with the baby boomers exiting, do you need to be a stock picker? I mean, is the whole buy every month, is that ideology just completely dead?
Yeah, a couple of great questions and a couple of comments. One, Harry Dent has probably done the best studies on demographics. There are others. And yes, you do need volume. So the only reason a commodity or stock rises in price is buying pressure. And for buying pressure to take hold, you need more volume. You need more people interested in buying a particular company. Or in the general stock market, you need a bigger base that can enter into the market, which means basically a population. I mean, you look at the way Buffett invested, it was very simple. He basically bought things on betting on population growth. He bet on Gillette because there's going to be more men shaving over the next 30, 40 years, which is, one of his best. Coca-Cola, they're going to be more pop drinkers, only because the population continues to grow. But that's coming to an end with baby boomers, and as you suggest, people now, it's a corrupt monetary system. They're over indebted, like the system itself is, and so they're cashing out, and a lot of people that might have assets are cashing out because they're going into retirement. So there won't be that base that's expanding to add more money to the stock market. So the general stock market is going to be falling off if all things are true, and who knows with the manipulations of the markets these days. But that would imply strongly that you need to be a stock picker. And the way you pick stocks is usually on earnings. I mean, think about what you're doing when you buy a stock. I mean, the stock market is a great invention in some ways, and unfortunately a lot of people don't understand the basics. But basically, a lot of people say, geez, I really would love to own my own business. Well, you can own your own business in about 15 minutes. Open up a stock trade account and buy some IBM. Now you own IBM. Now, you might not own much of it, but you're in the business. That is your business. And so that's the way you should look at your business. If you go into business, you're going into business for lots of different reasons, but most of the time it's for profit. So if the business is profitable, if you put up some kind of business in your local town or whatever, you want it to be profitable. So you ought to look at a company or a stock, I prefer to use the word company, and determine whether it's profitable. And if it is profitable, the earnings are going to be more profitable. If you get earnings that is profitable and you project the earnings are going to increase, or it's going to be more and more and more profitable, then that's a business that you should get into, i.e. buy that stock. If it doesn't meet that criteria, then what the heck are you doing in that business?
David, we have to go here. We're running close to the clock. Just for people who want to reach out to you, silver-investor.com to learn more about silver, purchase the David Morgan newsletter, Morgan Report, and then if they want to check out your friends at Riches and Resources, is it richesandresources.com?
Correct, richesandresources.com. That's correct.
And for those people who are looking at dollar cost average on silver, I know you have a great site that you recommend. I believe it is silver123.net.
Exactly. Silver123.net is it's basically set up as a dollar cost averaging program. And they have a graph that shows that if you started investing, I forget what it is, $100 a month, I think, at the bottom, and just continued to do that, how much it would have increased by today. And it's really startling how that would work. And yet you were buying, 1 month you bought at the top at 40 plus. But still that discipline of a bull market and just buying month after month after month takes a lot of emotion out of it. And I like that approach for most people. Most people are not that disciplined. But this is an automatic program that forces discipline upon you, because once you sign up, that same amount comes debited out of your checking account every month. Same amount. So you are dollar cost averaging. So that's a great program for the average guy.
It is. It is a great program. David, thank you so much for being with us today. We appreciate your time.
You're welcome.